Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, March 9th. It is 5:40 a.m. as I'm starting the video, and a quick look at markets has ES up 1%, small caps up 1.5%, and NASDAQ up 2%. Before I get started, I have some good news to report. We've had several new people join the YouTube channel and also register for the content on the blog site. I want to welcome them, and thanks to those that are passing along my links to other interested parties, your trading circle, other people you may know. I really appreciate that. The channel and the group are steadily building, and I really appreciate that. So thank you very much. I hope you get a lot out of the work, and it helps your trading. In other news, my trading took a turn for the better yesterday. I had shared with you yesterday morning my struggles Friday afternoon, and really what solved it yesterday for me was reverting back to trading like a fifth grader. It's a topic that I've covered in the past, but if you think about it, how would a fifth grade trader trade? Not worried about the money, not worried about being right, not worried about what the TV's saying, not worried about or creating narratives in their mind about the market's going up or the market's going down. It's just strictly looking at levels. When levels are recaptured from below, it's bullish. And when levels are lost from above, it's bearish. And if you're an active trader, which I am at times during the day, that's all that matters. Earnings don't matter. Comments, nothing matters except price and levels. And that really got me back on track yesterday. And if you are struggling with your active trading, I can almost assure you it somewhere it leads back to voices in your head that are leading you astray. Try to get rid of those. Think to yourself, I want to trade like a fifth grader. Very simple, and it eliminates a ton of noise, and I think you'll see better results. So again, another volatile session yesterday. Essentially wiping out the big rally Friday afternoon. So we're back to where we were at noon on Friday, at least at the close. Now, of course, NASDAQ futures are up 2%. So if you're a trader, what are you thinking? We're 4 hours before the open, here at 5:30 a.m. We could be crashing the lows or up 4% in 4 hours. Who knows? But let's just say we hold the line here at 2%. What are your thought process? Number one, mark your pre-market low. Mark your close from yesterday. Those are natural technical targets. And watch the gap open higher. A higher open means a gap below. We've seen that move several times over the last week where, the pajama traders jam it higher pre-market, and then when the big boys step on the field at 9:30, they fade it and close the gap. So there could potentially be, a quick 2% move simply to fill the gap, and nothing more consequential than that. But you want to be on the right side of that trade, or at least avoid getting run over by buying the open, and then they pull the rug 5 minutes later and take it down and leave you hanging high and dry up top. So, my bias on that type of deal is watch out for the gap open below, and then if they hold the line at the open or recapture a level just above, then you can get long with a stop just below, after that opening range is established. So let's look at SPY. Those trading the daily time frame, absolutely nothing happened. We took a big look above, and I dropped in this trend line. I don't know how substantial or consequential it is, but it did tag the top of this trend line here and get rejected, closing back below the 8 and 20-day moving averages, yet above the 50-day down here at 380. So again, the key pivot levels for me are 385 and 380. Above 385 and definitely above 387, which is where this downtrend line come in. You can get long and look for new highs. But below 380, that brings in more sellers and probably at least coming back down to test these lows at 270, 250, and possibly all the way down to 370 to check this closing low from back in January. So in between 380 and 385 will probably be a lot of chop. Here's a 2-hour chart. I've dropped in some trend lines here showing that broadening volatility. We came up and got rejected at 387, had several candles reach up in there and get turned down, and then we turned down later in the day. And this gold line, which is the 200 on the 2-hour, remember, is the 50 on the daily. So you can see this 380 level is going to be pretty important for downside support, because if you break 380, then you're down here to 373 quickly and possibly down into 370 at this prior low and at the bottom of this broadening formation. 30-minute chart, more active trader stuff. Notice all the candles at 387 where the buyers did not have the horsepower to power through. And whenever you see that, that's a good indication of a short-term top where, buyers just can't push above. And that was a line of resistance anyways. You can see here, support, 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 support. So that was a support level which turned into resistance, and then it fell away in afternoon trade. Again, the selling intensity was focused on the NASDAQ. I've dropped in a steep downward channel here. We opened marginally higher, but then sold off all day, basically wiping out this hammer / rally candle from Friday, where it had a deep look down to 297, found support, and then rocketed up in the afternoon. So yesterday's trade took all that back, and now we're 2% higher in the pre-market. So we're right here, back again, trading just below 307.50. So that would be a good line to key off of if you're an active trader. Back up here, if 307.50 can be reclaimed from below, on the open, and they can hold it, then there's the potential for a rally not only up to 311, but if that's taken out, they could rally it all the way up to 316, 317, which is where the 50 EMA on the daily comes in. So there's a confluence right here at 317, which I would imagine would be pretty stiff resistance. And if you were lucky enough or good enough to ride that up ride any kind of rally up into 317, I would be looking to, cover that, take profits, and then reevaluate how price moves right here. If it breaks out above 317, then you can get long and look for 324 to 328, and that would kind of indicate a reversal, breaking out of this channel and moving higher. I doubt it does that on the first move. Probably, reacts and then goes higher if it's going to do that. So that would be my rally target right there, 317. Here's the 30-minute chart from yesterday. You can see that we closed back down. And interesting to note that the pre-market low yesterday was 302. So when this got rejected here, what I was mentioning in the trading room is that 302 was the technical target. Now it overshot that and got to 300, which is where this low was. But it's nice to have that pre-market low, on your board somewhere, if not even marked on your chart, because once price rolls over, then it's a natural gravity point if selling intensifies. IWM, nice outperformance yesterday, as we've been talking about, is up 0.5% with the NASDAQ down, significantly. And that speaks to what we've been talking about so far. Sector rotation, money coming out of tech and the bubble stocks and going into value and cyclicals. Price is still below the 8 and 20, which is cautionary, but it is above our 217.50 daily pivot point. I would key off of that level. As long as 217.50 in here can be held, I think you're fine. As I mentioned, the small cap futures are up 1.5%, and you can see here that yesterday 222 was a rejection level. If we open and price can recapture 222 from below and hold it, then that opens the door to 223.50 and possibly even 225, 226 up in this area if everything goes really bullish. But you've got some very clear levels here on the downside. If you were to lose this 217.50, 218 area, your first target is going to be 215. So very clear levels. Just work to them and trade around them. This range here, 218 to 222, I mean, it looks small on the chart, but that's $4. That's a good trade in and of itself in a day. So, if we open higher, just a simple gap fill back down is, going to be $4. So, just be ready for that. Running through FANG, a lot of these, bad day at the office again. Facebook, we talked about the run from the bottom of the box to the top of the box. Pretty smart rejection yesterday in this 265 area and right back down to the bottom of the box. So now 254 becomes the line in the sand, and support. Now we're at support again. It stands to reason that you want to be long against 254 and see how high it'll take it. If it breaks, then 250 is your first target. And really, since this is a $12 wide trading range, you're probably going to come down here to 245 and test the top of that gap again, like we did way back here. So wide trading range, a lot of opportunities within the range, but also really choppy. So if you're an active intraday trader, knock yourself out. If you're trading on the daily time frame, there's not a lot to do unless you are catching these lows and highs and just, setting up calls or puts at the top and bottom of the range, and then just let that play out over days. But you got to be quick. That didn't take, it only was one day from the top to the bottom. So, careful about your overnights on swing trading with price in this range. Apple, bad day at the office, down 4%. We talked about this 121, 121.50 area. Once that broke, it was straight down the whole day. But now we're down here at the bottom of the channel where you'd expect a bounce. 115 is support. If you can recapture 118.50, which is going to be resistance, you can get long there and look for 121 and then 123 on a bounce. But pronounced downtrend until this top of this downtrend channel can be taken out. I think you got to view any bounces in here as counter trend rallies and look for potential rejections at overhead resistance. Tesla, the nightmare rolls on. Made a brief early day attempt at a rally, got rejected at 625 and then down the rest of the day. Here's your 200-day moving average coming in at 520. With the NASDAQ up 2% this morning, I'm assuming Tesla is in bounce mode. Like we've been talking about, any bounce that brought it back into 650, that's got to be an objective short right there. And if you get stopped out at 650 and it breaks above, then that's a nice long. But until that happens, I think you got to assume that we're going to get a test of the 200 and probably down here right at 500. There's a level. That was a breakout level from before. I would be looking for something right in between the 200 at 520 and this breakout level at 502 as a zone of support, not necessarily a pencil line in the sand. There's going to be a zone there. And then of course, if 500 breaks, then it's a whole new ball game. Microsoft is going through that Microsoft Exchange server email hack. Was down, but now in the pre-market, I noticed it was up over 230 in this 231, 232 area. For me, 230 is still the pivot. If you want to be long against 230, that's fine. You can look for 233 and 235. If, we open strong and then it loses 230 again, then it's a short again, looking for 226 to 224.50 down here at this prior low. So that's Microsoft. Amazon Free 50 Club came through with a double again yesterday, $100 if you were on your toes. We opened and made a flash up to 30.60. Let's see, the high, 30.64 was the high. Right back into this resistance area. When that failed, straight down. So you got the $50 move from 350 down to 3,000. Then 3,000 failed and right down to 29.50. So there's your second $50 continues to work, I would again just keep using those $50 levels on Amazon for your support and resistance. As long as the free 50 club keeps working, let's keep using the levels. This was a remarkable day for Google. I mean, technical triggers. I mean, look at it. Support, bounce, support, bounce, support, bigger bounce, top of the prior trading range, peak above, fail, liquidation the rest of the day, from 2100 down to 2000, more or less, back to support. That was a $100 move. And just remember the trading principles. And you had to be watching this. I mean, if you weren't watching Google or you didn't have an alarm set, you know, of course you missed it. But those breaks outside the range, you know, breaks outside that fail, make the bottom of the range the automatic target. And we've seen that so many times. You know, I could easily redraw all this stuff to make this the new box from 2000 to 2100. And so, you know, that was, I mean, it never looked back. It just sold all day. So anyhow, now we're at support. And remember, below 2000 is this big gap down to 1920. So that's another 80 bucks there if it were to break. So I would definitely have that level marked. Netflix, we had made note of this in the trading room. This is the daily chart. And the reason I'm showing it is because we're right at a 200 EMA test. And I'm sure it's bouncing along with the market here this morning in the pre-market. So right here at, let's call it 493 is the 200. If that breaks, quick move down to support at 470, and then that'll set up the ultimate support test where that would have to hold, or else you've got this $90 trading range, and a break below 470 would bring in 380, which is way down here. That would be your measured move target. 470 minus 90 for the trading range is 380. So that would be a place, even if you never traded Netflix, weren't interested in Netflix, just letting it grind away, ignoring pretty much everything I ever said about Netflix. Set yourself an alarm at 470, because if that breaks, it should be a unidirectional trade after all that consolidation to the downside. And, you know, after you get that move, you can go back to ignoring it and bank the profits and thank you very much. So very critical level here. Let's move on quickly to some of these other charts. TLT has been in a lot of focus as bond yields rise. Of course, TLT is falling. Recall the setup. We had this big descending right triangle, which is a bearish formation. Once the base cracked, we got a move and a quick back test. Very common. Fail, back test, fail. Right? Very common. Breakdown, back test, rolled over, and it's been downhill ever since. We did get an oversold bounce up to the top of this trend line here at 144, but then rolled over again. Now we're at this large volume over price bar at 138. It's bouncing this morning, so yields are falling. But if you got a bounce up into 140, 141 here, that would be, again, your objective shorting level. I think there's going to be a persistent bid in yields, which means there'll be, continued downward pressure on TLT. And as long as it stays below 141, I think we can see this 136 again for a test of the yield high or the recent TLT low. Now, what could be a fly in the ointment of that? If the QQQ selling morphs into a broader market correction, you probably see a bid to safety there in TLT, at least to a certain degree, which would bring yields down. So, but setting a broad market sell-off aside, I think as this stimulus hits, this 1.7 trillion, checks are supposed to be going out, in the next week or two. I think there'll be a bid in rates. I haven't looked at gold in a while. Been in a persistent downtrend since last August, but now we are at support here at 158 area. There's nothing bullish about the charts other than to say we are at a well-defined support level. I did look at gold this morning and it was up, 1%. If you wanted to, initiate a longer term position or just position for a bounce, this would be the area to do it with a stop just below, 158. I would be looking for bounces into 161, 165, and potentially all the way up towards 171. If you were more of a, prove it to me, wait for the breakout, you got to wait for this downtrend line to be taken out. But, if you're willing to try for a bounce, you could see a $10 bounce here, no problem, before it even gets into the teeth of any kind of real resistance. So that might be a trade worth taking. Here's the miners, same deal. Notice here a potential PPO bull cross as PPO flattens out and RSI threatens a breakout from this downtrend line. Look here, we've had more than a week of consolidation here, just above $31. This is a sign that the selling pressure has dried up on the miners. Might be a nice place to take a long against 31. You should get more juice out of a gold miner trade than you would in the metal. I think from here against 31, you can see a bounce into 34, no problem, just to go up to the top of the channel. And then, if you get lucky, you get a breakout, and then you can just roll everything higher from there. Not calling for that. All I'm saying is we are at support, and if you wanted to take a long, it would certainly be objective here against 131 with limited downside against the bottom of this channel. Quick flash through ARK. Got destroyed yesterday. I took half of my position off. Still got, part of it on. So the levels are well defined. I think on these names, I think they're destined for the 200. I don't know if, there could most certainly be, a relief rally bounce. And if you got a bounce, a healthy bounce, put your fibs on. If you get a 50% halfback, let me just do that for you here real quick. Let me see if I can just show you what I'm talking about. stock charts is really frustrating at times. All right, here we go. Let me change the color here. So here was the leg down. There's your fibs. If you got a 50% bounce into 53, you would have a window there, especially 54. If you got a bounce into 53 or 54, very objective place to put on a short with a stop just above and then look for the move back down to the 200. And I would go ahead, if you're not in, I would go ahead and do that across the board. See here on ARKG, they got the tag of the 200. Now it's all a matter of, does it come down here and settle, find support and bounce, or does it ultimately break down and move lower from there? ARKK, this is their flagship fund. Again, tagged the 200, not yesterday, but Friday. But then there was follow-up selling yesterday. And I think on all of these funds, I mean, you can watch Tesla. It's in a bunch of their stuff. So if Tesla's going down, ARK is going to have trouble. If Tesla's bouncing and looking more constructive, I can almost assure you that the ARK funds will follow suit, or at least stop going down. Autonomous, a bad day at the office. Here, still pretty far away from the 200 in this price void. So I would think this is going to come down to this 73 level, just at the bottom of this void down here. ARKW, bad day, below this large volume over support level. I would stay short against 145, and if you're not in it and you got a Fibonacci kickback or a kickback into 45, that's your objective level. And if it recaptures it and it looks like the Qs are getting all better and healthy and bull mode, you can be long 145 and then look for 155. So there's always multiple ways to play, depending on your view and depending on what's happening during the day. Here's 3D printing. As I mentioned, there's no options on this, so that takes me off the board. But you can use this as a guide simply to gauge the bigger players like DDD, Triple D, 3D Systems, SSYS, some of the other digital printers. So, okay, let's wrap it up there. We're right at the 30-minute mark. Thanks again to the new subscribers. If you're new here, though, and like what you've heard, why not join us? Hit the subscribe button and the alarm bell. Look over in the show notes, and you can register for all my content. Visit the website. You'll get everything I do in a nice email whenever I publish content. We'd love for you to join the crew, and you'll get an invite to our trading room as well. Would love to have you there. So just to recap the morning, yields are backing off a little bit. Pre-market gains are healthy. Watch that opening gap below for a flash gap fill. Don't get caught on the wrong side of that. Give the opening, several bars to settle out and see what they're going to do. Don't get trapped either long or short. No reason to jump the gun. Just watch it, and then we'll see how they close it again today. Outperformance by IWM seems to be persistent as money rotates out of the Qs and into cyclicals and value. So, all right, have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.